Hello. The company being analyzed today is GP Eco Solutions India Ltd. This is in the solar sector. 546 crores market cap, 13.6 times price to earnings. Now, historical financials, very high growth. Revenues reached 417 crores in fiscal year 26. EBITDA reached 62.59 crores in fiscal year 26, more than 5x of fiscal year 24's EBITDA. So 5xing EBITDA in like 2 years. Then in fiscal year 26, profit after tax reached 40 crores, more than 4x, actually more than 5x fiscal year 2024's profit after tax. So high growth shown in last 3 fiscal years, 2 fiscal years. Then some words from management regarding future growth expectations. Look at the yellow stuff. Building on our strong foundation and taking fiscal year 2026 as base year, fiscal year 2026 as base year, we remain committed to revenue growth of 3x in fiscal year 27 and 5x in fiscal year 2028. The company wants to triple fiscal year 2026 revenues in fiscal year 27, tripling revenues in 1 year, and they want to 5x their fiscal year 2026 revenues in fiscal year 2028. So we are talking about 411 crores into 5x, around 2000 crores in revenue that the company, I believe, from what I'm reading, is targeting in fiscal year 2028. That is extremely high growth. So 2000 crores ish. Now, what does the company do? It's in the solar sector. We've got four segments. One is distribution. So the company is distributing third party solar products like Adani Solar, like SunGrow, which is a solar inverter company. Then manufacturing. Companies also manufacturing its own solar products, like we have solar inverters through Invergy brand. Weird, Invergy is doing both distribution and manufacturing. The name Invergy, I will have to check this. I will check this later. Then third is EPC business. So they're procuring solar panels and they are executing solar projects, EPC projects. Now fourth is battery energy storage system. They're manufacturing battery energy storage system containers. This is a new business and this is going to be their big business, new big business that they're targeting. Now, performance highlights. So here, take a look at few numbers. What is this? 2 gigawatt plus of equipments have been supplied for solar power projects. So I'm presuming their distribution business. 3 gigawatt hour plus of battery energy storage system capacity currently or about to be installed battery energy storage system capacity. Now here, 250 megawatts of solar EPC projects being executed, 195 megawatts of solar IPP projects being executed. And basically, IPP here means they will make the solar project and they're just supplying or selling the electricity to the client, whereas under EPC, they're selling the entire solar power project to the client. Okay, that's the difference. Then 500 megawatt hour of battery energy storage systems projects currently being executed. So they're already executing them. Then for some future expansion, the company is establishing a 1.2 gigawatt solar module, that is panel facility, in fiscal year 27 only, and a massive 3 gigawatt solar cell manufacturing facility by fiscal year 28. That is what the company is planning. Okay, these are plans, but very ambitious growth plans with very ambitious expansion plans. Then profitability and efficiency, the company is targeting 17 to 18% EBITDA margins by fiscal year 28 from the 12 to 13% in fiscal year 25 through backward integration, increasing best contribution to 40% of consolidated revenues. So battery energy storage systems is a newer segment, way newer segment compared to the traditional distribution business, but is expected to be big. And its contribution is expected to boost the blended EBITDA margins, the overall EBITDA margins. Then in the best market, that is the utility. Okay, the utility part of the battery energy storage system market, GP Ecos is targeting a 10% market share in that utility market, if I'm remembering it correctly. And they're aiming to emerge among India's top three integrated battery energy storage system manufacturers by fiscal year 27. We are currently in fiscal year 27. And overall, the company aims to achieve 7 to 8% profit after tax margins by fiscal year 2028. So fiscal year 26 already achieved 9.6%. So let us see if it will revert back to 7 8%, or this is the new normal. Okay. But 7 to 8% as the base profit margins. Then let us take a look at the balance sheet to see if the company is balance sheet wise healthy or not. So fiscal year 26, long term borrowings of 43.18 crores, big increase from fiscal year 25. Short term borrowings 65 crores. 65 crores short term borrowings. Okay, 43 crores long term borrowings. Then we have trade payables, which is, of course, trade payables are related to the normal business. Then let's come to the assets. They got 22 crores of other non current assets. Other non current, okay. They got 19 crores of cash. Okay, 19 crores of cash, and the majority is, in inventory and trade receivables, which is related to the normal operations of the business. Okay, 19 crores in cash, around 100 crores in debt. And if we have the financials of fiscal year 26, a P&L statement, take a look at finance cost. So finance cost of 7.11 crores and EBITDA of 62.59 crores. You divide EBITDA by finance costs, and I believe you get the interest coverage ratio. Very important to see how well they can actually pay their interest costs. So here we have 62.59 divided by 7.11, that is 8 times. We're looking at around, I think so, around, yeah, more than 8 times interest coverage ratio. That is a very healthy interest coverage ratio. And in fiscal year 2025, we also had around 8 times, okay, interest coverage ratio. So that is to be paid attention to. Now, pretty interestingly and very impressive that despite having such a big growth rate, the company has shown 2 straight years of big operating cash flows. 22 crores of operating cash flows fiscal year 25. It was minus 6 crores approx in fiscal year 24, 2 crores approx fiscal year 23, and 29 crores of operating cash flows in fiscal year 2026. So GP Eco Solutions is targeting massive, massive growth. It's hoping to become an important player in the battery energy storage systems. I believe 2,000 crores of revenue in fiscal year 28 is a target. Let us see if they can achieve these targets, and let us see if they can even maintain these positive and even rising operating cash flows. So that is it. Bye.